Hey everyone, this is Rob Keens of goldsilverpros.com. We have a very special Memorial Day edition of the broadcast for you today. We did not do the live metals broadcast yesterday because it's a holiday weekend, but we did want to release something for you today that we think is very special. Before I get into the presentation, what we're going to be talking about, I want to take a moment and recognize all the people that have served this country and all of the people that have lost loved ones overseas. And also, for those of you who may not know of or had anybody serve in the military, if there are other people that you are memorializing today and thinking about and the impact that they had on your lives, we certainly understand that. We've done that ourselves. And I took basically the first half of the day just remembering the people that made a big impact on my life. And of course, my father had served, my older brother had served in the military as well. My father was in D-Day in World War II, and my brother served in Vietnam. So definitely want to take a moment and remember all the contributions that those people had in order to, serve our country. Now I wanted to get into the presentation, and what we're going to be talking about today is a little bit of a gold price forecast, and then I'm going to bring you guys a company that you may be interested in that's doing business in Canada. So a former U.S. Mint Director, Ed Moy, has come out on Kitco back in April and made an interesting gold forecast and made also a very interesting admission. We hadn't covered this on the program yet. I was kind of saving this because we've had a nice pop up in gold. And I wanted to look back on that, what he talked about last month with Kitco News. So we're going to go ahead and share that. I think you guys will find this very, very interesting. He was on with Kitco and having a nice interview with Kitco News. Ed Moy, the former U.S. Mint Director, I believe, let's say what years it was, between 2006 and 2011. So he'd done it for about 5 years, definitely knows how the mint works, one of the biggest mints in the world, and some very interesting comments. I'm just going to go ahead and play it, and then we'll talk about it here in just a moment.
Well, yeah, you're absolutely right. I mean, there does seem to be a disconnect between spot gold price and demand for gold bullion. We're seeing a big premium in both silver and gold between the physical silver and paper silver, and as well to your point with gold. But I guess the question is, at what point does this premium catch up with the spot price?
Mm-hmm. Yeah, and I think what's artificially depressing the price of gold now is that there's a lot of institutional investors that don't hold gold, but what they do is they buy gold derivatives like futures and so on, and a lot of them are betting that the economy is going to recover, everything's going to be fine, and gold's going to go down. But as those short contracts come up, what you're seeing is a popping in price, just like it did last week. It went from 1730 to maybe 1785. And I think over time, you're going to see much more of that, especially that since that not only the U.S. Mint, but also other mints around the world, Australian's Perth Mint, the Mexican Mint, have all run out of gold. They can't keep it in stock, and retailers can't. There's so many shortages, retailers are having problems accessing that gold.
All right, so given that the demand is there, and to your point, there are struggles with supplies, at least from a mint perspective, what does it mean for the price? What is your outlook for spot gold over, say, the next 6 months or so?
Yeah, that's another good point. And I would just point out that Goldman came out with their report today, and they think gold's going to go up to 2,000 over the next 6 months. I think that's a fairly reasonable prediction. It might even go up to 2,100. Because when you look at the price of the premium that it takes to buy a gold coin today, I think the true market price of gold is between $2,000 and $2,100.
Okay, a lot to unpack from that little clip there, and that's why I was saving this one, because he made this call on April 19th. Of course, he quoted Goldman as saying the price could go up to 2,000, maybe 2,100. We did pop at 1,900 very recently, so it did get really close to that, although he did give 6-month time frame. It was basically most of the rest of the year through maybe October-ish time frame. I think he's correct. I definitely agree with him on that. But here's the U.S. former Mint Director saying a bunch of things. The first thing, and the biggest one they basically admitted, was the price of gold is artificially suppressed from people buying paper derivatives like on the COMEX and betting that gold's going to go short. And what have we said on this program since we started? That there is artificial suppression in the derivatives market. because it's substituting for actual physical gold. It's giving people access to the gold trade without actually involving physical most of the time. Most contracts aren't physically delivered, and it artificially suppresses the price because people are betting on gold to go down because they're constantly betting on the economy to go up. And why see people constantly betting on the economy to go up? Because the Fed is printing money and it bids up the stock market and it supports the bond market. And that's why, and that's when you have that artificial stimulus from the dollar and the Fed, it makes the economy look better than it is in terms of stock market. Bond market has been relatively healthy. I mean, people are still buying the 10-year and things like that. And so what happens is people are constantly betting on gold going down because what is gold? It's a safe haven and it's a crisis investment. So they're betting short on the paper. And basically, U.S. Mint director basically admitted that. So it's nice to see somebody who's been involved in the gold space, especially in the U.S., in a very credible position, confirm everything that we have been saying all this time from simply looking at the market and looking at the trades. The second big thing that he said there was that all the mints are running out of gold. Remember when I went back and talked about the Perth mint and how they were running negative about almost $1 billion short on their gold? They're basically selling gold without actually having received it. And in order to get gold to the customers, they had to borrow to the tune of over $6 billion of gold. So now the Perth mint has run out of gold. Like he said, the U.S. mint, some of the other mints around the world have run out of gold. And that's what's led to the price premiums on the retail products. And I agree with him. And he's basically saying what we showed on the balance sheet of the Perth mint. We had a CFA, provide that data to us. We went back and looked at it, and we can't argue with the numbers. And the numbers straight off of their audited, published online financial statements say, and they said in a press release right after that they had basically sold gold that they didn't have, and they had borrowed a bunch of gold, and that was the case. And you can see it in the financials. And so it's nice to see a mint director basically saying, yeah, we have a shortage of physical gold, and that the price is artificially suppressed using the derivatives because people keep betting on the economy to come up, so they're suppressing the price. And that's why you have the disconnect between the retail premiums and the actual spot price, which is determined by that paper derivative market. Big things there. Also nice to see him quote Goldman Sachs saying gold could go to 2,000. He thinks it could go 2,100. We think eventually it's going to go much higher, but that's a nice short-term target for you gold guys to see it pop up and re-challenge its previous high of late last year of about 2060, 2070 an ounce. We think that's going to happen again this year. So very bullish for the gold market. So that was a really cool report to see. Former U.S. Mint director confirming all the things that we have been talking about. Certainly adds credibility to that whole argument about what's going on. So now that we know that the gold market is very bullish, and we think that we're going to have very bullish fundamentals, and that there's an actual physical supply shortage, and you're not seeing that in the actual price because of the paper derivative suppression and people betting long on the economy, where do you get the gold? If you're having high premiums on the actual physical gold, or you feel like you have enough physical gold, what's another way to get into the gold market? That's the mining stocks. And we've been talking about the mining stocks for a long time. Disclaimer here, we're not your investment advisor. You should do your own due diligence and contact whoever is your financial advisor before you make any trades off of this. But what we like to do is take a risk-based perspective and examine some of these companies and bring you the ones that we think could be potentially good for you. So we have another one here today. So I'm going to go ahead and share a screen, and we're going to walk through that. Just remember that with the gold and silver stocks, that you get leverage to the gold price, especially when gold and silver are trading at what they're at. And most of these primary mines, gold and silver mines, are going to be profitable. When they're profitable, every dollar above the cost of them getting out of the ground, the all-in sustaining costs, or every cost that they have in terms of getting out of the ground, not just the mining cost, but the general administrative and everything, all of that's profit, their bottom line. And for every dollar that goes up, you see leverage to that in their share price. And so times right now where you have that positive gold and silver price above what it costs to get it out of the ground, these companies are making a lot of money. And what happens is they have a leverage. And when they start getting noticed in the market and they start getting noticed by investors, you can see some incredible returns. We're in that phase now, I believe, of the gold and silver market. So we're going to go look at the company that we wanted to talk about today. This is a really, really good potential for your portfolio. This is going to be a near-term producer, which is a sweet spot on the Lassonde curve that we like. It is, of course, Gold Mountain. It trades on the Toronto Stock Exchange Venture under GMTN, and on the OTCs here in the US under GMTNF. Once again, that's Toronto Venture, GMTN, and OTC GMTNF. You can see right here on their ticker banner. It's also on the Frankfurt Stock Exchange if you're over there in Europe under 5XFA. 5XFA. All right, let's talk about Gold Mountain and what they do. I wanted to first talk about the project economics, because when you get into the numbers like I do, you want to look at the economics and see, is this going to be a good investment? So here, recently, May 27th, they updated their PEA, their project economics, and at the Elk Gold projects. Elk Gold is their big project, and it increases their mineral resource estimate from what it was to a new number. We're going to get into that. So updated the PEA with after-tax net present value at a 5% discount rate of 231 million. What that basically means is they look at all of the gold that they're going to mine. They look at when they're going to mine it. They look at the cash flow. They discount it 5% a year for the time value of money, and they come up with a positive $231 million. That means if gold price doesn't rise anymore, it doesn't even get to 2,100, their project was 231 million. And that was an assumption, usually the gold price being much lower. If you look at their PEA, it will tell you the price that they used. So it's probably actually better than that now that gold has gone to 1,900. 19,000 ounce annual production in the first 3 years, and then they're expanded to 65,000 ounces in years 4 to 11 as they continue to build that mine and get to that resource that they have. Increased cost certainty over the September 2020 PEA. So the one they just did a few months ago, they've even got it better. So they've got a construction and mining contract with a company and an ore purchase agreement with New Gold. So they're doing very well. So here's the summary. The PEA contemplates 19,000 ounces per year that ramps up to 65,000 ounces by end of year 4. What that means is, because they're going to start producing small and get bigger, you can buy the shares at a relatively speaking discount, meaning when they hit that 65,000 or anywhere near that 65,000 production, they're going to have cash flows go up. The share price of that company is going to go up as well. And that's going to be very bullish. So if you're wanting to get into it, it's better when they're about to build the mine. They're on that sweet spot of the Lassonde curve right before they build the mine, and everybody starts piling in. The big institutional investors pile in, and when they're just mining a little bit, and then they get before they get to the big hump of 65,000. So this, if you were going to enter this stock, this would be, strategically speaking, a pretty good entry point. Again, pre and post tax NPV 395 million, post tax 231 million. That means they're profitable. They have measured and indicated over 3 million tons, or about 651,000 gold equivalent ounces, and with an additional inferred of 159,000. So a lot of gold in the ground. They're going to be a good size producer. And if you look at their grams per ton gold equivalent, it's 9.9, 5.8, 6.1, about 6.1 if you use measured and indicated. That's astounding. A lot of these projects mining in North America, you can be profitable at about 0.5 gram per ton. They're sitting at 5.9 grams per ton. There is plenty of space for profitable gold in this company. This is what you call a really good high-grade gold project in today's terms, highly profitable, and that's why it has such a good return on the money. So that's one update that I wanted to provide you guys off their website. If we look at the news, there's more. We definitely can get into more news. They updated the economics, the grant of stock options. They completed a $3 million property payment to Equinox. So let's look at that one real quick. So the company had acquired the Elk Gold project for $10 million. This is the deal they had with Equinox for $1 million in cash deposit, $9 million interest-free loan. The initial May 16, 2021 payment was a major milestone, as it was perceived as one of the greatest risks surrounding Elk Gold project. In other words, would they be able to pay it back? They took on the loan, would they be able to pay it back? And they were able to raise those funds. And you can see that their share price is doing very well as well. Off of their website, $2.44 Canadian on the TSX and $2 US. Nice share price for somebody who's not even producing gold yet. Gold Mountain maintains a strong treasury, so they have plenty of money in the bank. And the two remaining $3 million payments to be made with the proceeds from commercial production. So they're going to go into commercial production here pretty soon. And once they do, they're going to have the money to pay all that back. And then they're still going to make tons of money, because you see that they owe, it was 10 million total, but their after tax profit, the profit after tax, paying the tax and then the net profit, 231 million. So you talk about investing 10 million, then investing a little bit more to do some drilling and things like that. You come out with 231. That's what you call making money on a project. And this is their quote from the press release. The property payment represents yet another major milestone to de-risk the Elk Gold project, commented CEO Kevin Smith. With their mining costs solidified or purchase agreement in place, the surrounding indigenous communities and the property payment complete. In other words, they've done all their due diligence with the communities, all that stuff. It's just the mining permit amendment. So they are in place to go ahead and get started. I wanted to take a look real quick at their presentation. It is British Columbia's newest gold producer. Let me blow this up just a little bit, get a little bit bigger. So they're going to be in BC. This is in Canada. This is a premier mining district. Not a lot of risk here. Great history in the gold mine district in BC. is the Elk Gold project is right here. Let's take this down just a little bit for you guys. Here's the Elk Gold mine. It's in an established area. You can see some of the other mines going on. It's 3 hours to the Elk Gold mine from Vancouver, which is not far at all. 35 minutes to Merritt. It's got a nearby district in Kelowna. There's a new gold project out there. The Elk Gold mine is 21,000 hectares, which is really big. Past producer at 97 grams per ton. So when it was just, gold lying on the ground or the easy gold that a lot of these projects, were previously mined back when we didn't have modern mining techniques, 97 grams per ton. But even on their updated PEA, they just released this month, almost 6 grams per ton. And in today's terms, that's incredible. So 127,000 meter historical drilling. So a lot of drilling, which means they have a lot of data. 127,000 meters is a lot. That's a lot of data to work from to know where to go to get that gold. They had 8,739 meter phase 1 drill 1 program. So they're continuing to drill it out. So here's the overall timeline, getting the mining permit, commissioning the mine in Q3. So they want to commission the mine in Q3 and start the ore production in Q4. This is a near-term producer. You have a window of not very long before they start becoming a producer, producing gold, making money. It'll take about a quarter of that for the market to really see, what their costs are and how that comes out. Then that price is going to rise. Of course, it can rise a little bit between now and then on the anticipation of these things. But once you start mining and you have about a quarter results of data and people can start, the buy side analysts can start looking at that and saying, okay, where are you guys and how are you going to do it? That's where you're going to see that share price appreciation. So you're not going to have a lot of time to get into this stock before you're going to see that pop from that production, as long as they stay true to that schedule, which they've produced. So they want to get into commercial production Q4, full scale production Q3 2024. That's when you see that 65,000 ounces. That's when you see a big share price pop, assuming all of their assumptions and analysis and in all of the calculations that made in their PEA are correct. Here is the mine map. You can see where it's over 10 grams per ton. There's a lot of over 10 grams per ton here in the red, 5 to 10 grams per ton in the orange, and 1 to 5 grams per ton in the yellow. Here basically are all their mining targets. All of this information is here. Again, net present value, 231 million, 6.98 on the head grade, 5.9 grams per ton overall for the project. Initial capital cost, only $9 million to get this restarted. After tax payback period 1 year. That's what you want to hear if you're an investor. Pay it off early, and especially lower production, 19,000 ounce production, pay off, boom, a year. You haven't even got to the big production yet. You can pay that bad boy off after a year, and then you've got another year of 19,000, then you go hit the 65,000. You're going to see nice little share bumps as long as they stick to their mining plan. Nice little share bumps in this company. And basically, here's what the site looks like. It's got a couple of pits, they're breaking ground, doing some other things. More information on the structure of the stock shares and things, fully diluted, only 74 million for a near-term producer. Not bad at all. The share dilution is not bad. They're sitting at 244 Canadian, $2 American at only 74 million shares. I mean, they got most of their financing done. They're not going to have to super dilute here. Basically, it's just keeping that share price up. Maybe, issuing some shares when they need it, but they're well on their way. I think they've done most of their initial share dilution, and they're just going to go and get the mine running. And they've got really good management team, by the way. I've spoken to some of these guys. David Toffel was on our program for Portofino Gold. I've talked to him. I've talked to some of these other, I know some of this management, good guys in the industry that know what they're doing. I want to take a moment and do a technical analysis of their chart. I don't always do this on the mining stocks, but this one's really interesting. You can see since they started trading back here that they have this nice open upward pattern. You can see a nice little base in the price here. You can see it popping open, a little bit of an open flag there, meaning they have not very nice positive momentum on their share price. They had a little bit of probably profit taking here, but they've recovered nicely, stayed well above the 50-day moving average, which is this nice blue line right here. They got nowhere to touching the 50-day moving average before continuing back up, and they got nowhere to touching the bottom side of this trend dating back basically since the beginning of 2021. So nice little trend here. That means they've got more positive momentum, lots of volume, lots of share volume if you want to trade in and out of this one. And again, near-term producer. I expect long-term this price to go up. Now, can it have some dips and valleys in the meantime? Sure, it can have some dips and valleys in the meantime. But all of the things for this stock are positive going forward. You've got the positive share price, the good management, near-term producer, payback after 1 year, $231 million on conservative economics on the PEA, Lots of good things to like about this company. Once again, let's go right back to that presentation. We'll give you the tickers one more time in case you're interested. On the TSX, GMTN, on the OTC, GMTNF. That is Gold Mountain Mining in Canada, a tier 1 district, good management, good project economics, all of those things. This is a really nice option for a portfolio if you're interested in the gold miners. Remember at the beginning of the program, Ed Moy, basically former U.S. Mint director, saying you have shortages at Perth, you have shortages in the U.S. Where are you going to get the next amount of gold? As the gold price is rising, you're going to get it out of the ground. What is Gold Mountain? It's a near-term provider, okay? That's where you're going to get the next amount of gold, and you get that leverage to the share price of the stock. Potentially a good option for you. Want to bring this to you guys. Everybody have a very happy Memorial Day. Hope you guys are having a great one, spending time with your family, relaxing. I hope this report, hits you at a good time where you're at home. You maybe do a little bit of research, see what's going on. Certainly happy to have you guys on the channel as well. If you have any questions for me, ask down in the comments and I'll get to answering those. I want you guys to sign up for the free newsletter. So why don't we take you to the website here real quick. It's been a while since I've asked you guys to do this. We want you guys to come over to Gold Silver Pros because we have this, what we think is a great little free newsletter for you guys. Doesn't cost you anything. Type in goldsilverpros.com on your browser window, hit that little newsletter icon, put in your email address right here. You get this for free. In addition to all the video content we do that we notify you guys, we've started writing articles again, not super long ones, but nice little tidbits. You can read it in just a few minutes, gives you what's going on in the gold and silver markets, little things for you to pay attention to. The first one we sent out recently was about the Perth Mint. Nice little summary on that. I'll send these little tidbits from time to time, these nice little written pieces that allow you guys that doesn't take a whole lot of time to get into as long as the video does. And if you guys are interested, we have Gold Silver Pros University. You click on Learn on the website and you subscribe and you can learn, go into our university and learn all of the things about the economy and how to invest in stocks, for example, about the precious metals, how to stay out of the sharks, the sharky waters of the financial realm, stay safe, grow your wealth, invest in gold and silver, understand how the economy works. That's right there. Plus, if you subscribe to this, you also get the Golden Quarterly, which is a quarterly newsletter in which we do some stock risk assessments. We tell you about the economy. We give you the latest of what's going on. So definitely wanted to let you guys know that we have that. Thank you so much for joining. Enjoy the rest of your Memorial Day. Pleasure to have you on the channel. Will we be back? We're going to do a live stream later this week. I realized for the last 2 weeks I haven't done them on Sunday, but we're going to bring back the live stream. I'm going to announce it. We're going to do it one night this week. I have got some very super interesting stuff, news basically for you guys going on in the market. And we'll get back to analyzing the COMEX as well a little bit and show you what's going on there, show you why gold had popped above 1900. And we believe there's very positive dynamics going on in the COMEX at the moment. Stay tuned for that this week and stay tuned for the live streams. We'll do some this week. And of course, if you sign up for that free newsletter I just showed you, we'll email you and let you know when that's coming out. Till next time, guys, this is Rob Keynes with goldsilverpros.com.